Greetings, fellow traders. It's Fonsi here. Today, our topic is going to be on Bollinger Bands, and I'm going to name a few stocks on the ASX that I'm going to use as example. And this does not constitute trading advice because I'm not a broker. And I'll also get my brother to talk to you about the standard deviation. So the stocks I'm going to use, we've got ADN, DOU, FMG, and SYA. So what are these Bollinger Bands? So these Bollinger Bands actually are envelopes that are plotted at the standard deviation level below and above the simple moving average of the price. And so they focus on volatility and price. They can be very risky, so you need to add another indicator as well on top of that. So these envelopes were developed by John Bollinger. I'm sure most of you have come across that name. So these lines are drawn, as I said, above the SMA and below the SMA. So what do they do really? They actually help you to find the trend. They actually help you identify the entry and the exit point. Sorry, there's an error there, but exit point, it meant to be reversal and breakout as well. It also will help you look at the overbought and the oversold, if the stock is overbought or oversold. So next one here, we're going to talk about standard deviation, and I'm going to pass you on to my brother.
Now, basically what's happening here is what we call the application of probability theory, which as it applies to financial markets. So it's basically talking about the volatility of your security. And one key thing that you need to take away from this is that bands are calculated from standard deviation in terms of a moving average, which is typically 20. Now, this statistical model comes in because the main issue here is 95% of security movements occur within the two bands, which is the two standard deviations on the left, so plus or minus 2 is what we call it. Now, you might be asking what's happening to the other percentage. Yes, the security can come out of that range. It's unusual, but highly possible, which means chances are there's a higher chance that the security will revert back to the 95% in terms of its security movement. Now, another thing that Fonsi will talk about is how now this deviates from the mean in terms of the upper and the lower bands.
Okay, so I'm just going to talk about the structure of the bands. So you've got, as you can see over here, you've got the upper band. I'm going to give some examples shortly. So this upper band is actually the middle band plus 2 standard deviations up. And the middle band is actually the 20 simple moving average. So here we're actually looking at the 20 as the period. The 2 is the standard deviation. And we've got a lower band, which is the middle band minus 2 standard deviations below. So over here, what do you actually need to look for, when trading with these bands? So the narrow band, you need to look if the band is narrow, because this narrow band, which will actually signal that, there's low volatility and a breakout is likely to occur. So a sharp price move can come either way. So you need to look at this because it will show you where the trend may be going. So you may see a wide band as well. And this wide band actually indicates very high volatility. So you will see that as I give examples as well. And you need to learn how to trade along the. So this will actually show you which way the stock is moving. And it's very useful if you can add an indicator to this, because just using Bollinger Bands is very risky. So you need to find an indicator that can work together with this and see where the price is going. So here, for example, we've got FMG. I've highlighted in orange. You can see where that narrow band is, and there is a breakout. The first from the first orange square or rectangle, and the second one as well. So you need to take note as well. When price moves out of this band, this may mean that a strong trend is going to continue. And if price gets back to the band, that's the middle one, that shows you that the trend has failed as well. Sometimes the price will hover around, the lower band or the upper bands for a while. And you can add other indicators to see what really is going on here. And another thing which actually happens as well with this band is that you can actually see when the trend is ending. And this may actually be from the bands having a very large separation. So the more you look at it, the more you know what all this means. So I'm just going to look at that FMG chart, and you can see I've added the RSI there. So what the RSI basically does is that it actually shows you some relative strength. That's the relative strength indicator in the, for the stock. So it's a momentum indicator that shows overbought and oversold conditions for the price of the stock. So we're going to focus on the 30 and the 70 mark. So most of you, if you don't know what that is, you can look it up. So if the RSI is greater than 70, it shows an overbought or overvalued territory, and trend reversal may be actually coming. So you need to know that. In the RSI, if it's less than 30, it's showing oversold or overvalued area. So I'm sure most of you have had traders saying it's overbought or it's oversold. So the RSI will help us to actually see the price momentum, to see if it's bullish or if it's bearish. So I will show you an example of this bullish divergence and this bearish divergence as well. So I'll give you an example later on. So here you can see the Bollinger Bands. You've got the upper band, you've got the middle band with the 20 simple moving average. You've got the lower band as well, and you can see the RSI. So just get to know if you can see the correlation between that RSI and the Bollinger Bands to see what's happening to the price. Is the RSI goes above 70, or if it starts dipping down going towards 30, and you'll probably see that correlation. Sometimes those candles around the upper band there, you can see what's actually going on with the RSI. And here we've got SYA. I think it skipped another chart. We've got ADN there. ADN, you can clearly see we've got a thin area there, some consolidation going on between June and I think up to September, and then a massive breakout. So we had a narrow bend there, then a massive breakout upwards, and ADN kept going right up to 40 cents. So you can see where those candles were hovering all above the 20 simple moving average. Then I'm going to quickly go to SYA. SYA, similar pattern right at the beginning. You can see the narrow band there. You can see what happened to the RSI at the bottom, and then it went up above 70, and there was a breakout there. SYA then went up from 1 cent to above 5 cents. So you could have been actually looking at this, looking at volume as well, and seeing what's going on. And that's a good example of these narrow bands. You can see where it's widening, the price volatility, all that going on. Then I've got DOU here. DOU, I've got that there to just show you a bullish divergence. So when you look at the Bollinger Bands using the RSI, you need to look at the bullish divergence and the bearish divergence. So the bullish divergence is when the RSI is oversold, as I said before. So it has higher lows. And when you look at the price actually forms lower lows. So I've highlighted there where you can actually see the RSI with higher lows. So it was going towards 30 there. And if you look up above that, the Bollinger Bands, you can actually see the price forming lower lows. And soon after that, there was this bullish momentum and a bullish divergence confirmed there. So you can see that the price actually went up, and you could have easily traded that using that indicator there. It was, I think, from 16 cents to, it went to a high of 37.5 cents. Of course, the bearish divergence, whereby the RSI is overbought. So here you see that the RSI has got lower highs, and then the price actually shows some higher highs. So you can actually go and find these charts, and you'll see where I'm actually coming from with that. So you can use your Bollinger Bands, get an indicator that works for you, and you can actually see these trends. So you can actually predict and see what's going to go on there. If the news comes as well, you know what happens. So you need to look at your candles, where they are, if they're below the SMA, if they're above that SMA, that 20 SMA that I talked about. And most cases, as you heard before about the standard deviation, that if the price is actually away from the simple moving average, we will see the price is reverting back near the SMA, which is the 20 SMA. So yeah, this is the talk about the Bollinger Band and the standard deviations. Now you know that as the bands widen, the price volatility also increases, And here the standard deviation is less concentrated around the mean here, which is our 20 SMA, our 20 simple average, moving average. And then we've got as the bands get narrow, volatility decreases, as I've spoken about there, when those bands get narrow. So just get to see the correlation between this RSI and Bollinger Bands, and see what's happening to the candles, what's happening to the volume, and you'll probably know when to enter, when to exit, and see where the trend is going as well, and make, better decisions when you're trading on the market. So I hope this helps. And thank you very much for listening to this. You can follow Von C on Twitter, or you can subscribe to my YouTube channel. I'll see you in the next presentation. Have a great weekend. Bye.